Hang Seng has hit a new low. It is down around 0.4%.
Once you get a close above the 20,222 mark, I mean, the medium-term resistance stands at 20,700.
What's important for India is the currency is far more stable than we've seen in the past against the US dollar.
Tata Chemicals this time around has cut prices by around 1,000 rupees per ton, which is for soda ash light grade, 20,130, and holding on to that psychological level.
We continue to like large caps over mid and small caps in that sense.
We are looking at improvement. So it will happen that maybe year on year we will slowly improve by a percentage each.
Tata Technologies, that's the one that's listed at 140% premium.
Closing equity as of June was 1,415 crore rupees.
Footlocker globally has 2,600 stores in 26 different countries.
Banks are cooling off after yesterday's big move.
Company has shown a CAGR of 40-45% over the past 3 years.
We've established significant momentum over the last couple of years.
The Dubai Expo Center. In just a few hours from now, thousands of delegates from across the world will descend on this building.
Well, polls are underway in the state of Telangana. The mid-cap side of things doing really well, 123 points higher there.
Well, it's a flat session so far. The market not doing very well, consolidating a little bit. We are coming to you live from the CNBC-TV18 News studios. This is the last hour closing bell. I'm Prashant. With me, my colleague Surabhi and Nigel. Hi, afternoon.
Gentlemen, good afternoon. I guess we were asking ourselves and our guests this, right? Whether this big move on the banks that we saw yesterday, whether it's the beginning of something much bigger, that long-awaited catch-up rally, or a flash in the pan. I don't think we have a decisive answer because we've seen some cool-off, some profit-taking from that today.
You know, the market is telling you the picture, right? You need to participate on the long side. You got a 60-point downtick today. You need to gobble into that.
Yeah.
And as we speak, we move back into the green. So that's alpha market.
Absolutely. I mean, just a little bit of consolidation is what it is. You know, we got a very sharp move. The Nifty Bank, for example, some 1,400 points in 4 sessions. So it's okay. I mean, nothing very much going on right now. I think unless and until you get some shocker out of the exit polls by about 5:30, I mean, the polls will start coming out at 5:30. You know, they'll, I guess, start slow, I mean, and then go on to some of the bigger states later into the evening. The results for Telangana, of course, will come in much later by about 9-ish or so because polling only sort of closes later in the evening. So unless and until it's a big shocker, an upset, I think this is just going to be a consolidation and the market just moves right back after maybe a day or two of what we are seeing right now. So 20,100 after a very sharp up move. In the very near term, I just put out 2 levels. One is, you know, just kind of in a way trailing stop losses. The 20-hour moving average is 19,951, which is 50, not 50 actually, which is a little lower than where we are right now. But that's the closest I could find. On the Nifty Bank, if you can have the intraday up, the 20-hour is 44,110. So these are near-term levels which both indices should respect as we move forward. And hopefully, with everything okay, later this evening, as far as those exit polls go, the market picks up pace. Maybe not tomorrow. It doesn't have to be tomorrow. But after a day or two of consolidation, things look up again.
Yeah, absolutely. And the consolidation has been in a very narrow range, right? So we're not talking about a 500, 600 point gyration at all. It's been a 100 or 110 point sort of range on the Nifty. And the lower part of that range is above 20,000. I mean, the day's low was 20,115 thereabouts. So 20,015 thereabouts. We've maintained that mark. You know, the constituents today, the profit taking is visible in banks and some of the big IT stocks. They're the ones that are under the weather. They're kind of also looking at some profit taking and undoing some of the recent gains. So TCS and Infosys, along with the bigger banks, that's where the pressure is. And count in a Reliance. Reliance hasn't played ball today. So that's the bank Nifty constituents. Now let's pull up the Nifty constituents and you'll see that Reliance, along with Infosys, TCS and all of these banks, this is where the pressure is coming in. On the flip side, some of the auto stocks are seeing continuation of that uptrend, that up move. M&M is a case in point. We're seeing good gains on Hero Moto as well, continuing its good show from yesterday. So that's where the traction is. iShares today has, by the way, joined the two-wheeler party. Yesterday, it was sitting out of it. But auto is still having a good ride.
Well, that's right, Surabhi. You know, things are looking up actually for some of these auto names. And iChoo Motors in particular, they have launched a couple of new vehicles, in the last 1 month or so.
The new Himalayan, I believe.
Yeah, the new Himalayan, which is looking quite impressive. And I think the Shotgun is the other one that they have launched, and maybe I'll have a look at it actually. It's a 650cc, but it looks fairly impressive. So that's, about the two-wheelers. But from the broader markets, you pull up a couple of names. India Bulls Housing Finance, the stock has suddenly spiked up. There's a big volume spurt from around 2 p.m. So India Bulls Housing Finance comes up for you on the screen. HAL, there are hopes that maybe there's a deal of some sorts that comes about in terms of an order win. At least some certain sections of media are indicating that. So that's why that stock has moved to the high point of the day. And Dixon Technologies, one would have said at 5,000 rupees, it's fairly expensive. Well, it's now at around 5,600 rupees and seeing some buying interest from the low point of the day as well. So plenty of stocks that are doing well from the broader market. So the headline index is more or less flattish. Well, how do you trade the final hour of trade? You have Mitesh Thakkar who joins us. Hi, Mitesh. Good afternoon. Thanks so much for joining in. What's your view, Mitesh, in terms of the Nifty call? And how do you expect this last hour, if you have a view out there, to swing? Which way?
Good afternoon, Nigel. So, earlier in the day when we were negative, my view was to buy on declines. I was, in fact, hoping that we'll get a dip, to about levels of 19,970 odd levels, but we got a low of 20,015. The overall trend is on the positive side. So I think, maybe after a day or two of consolidation around this gap area, which is about 20,120, I think we should then test the all-time highs and maybe even clear it this time. So we'll stay positive. I think, unless until we see Nifty get below 9,900, no point of getting fearful. I think the structure is very positive. Only a break of 9,900 would, suggest that there's some kind of a momentum slip over. But otherwise, it's a good chart to trade long. Having said that, the stock calls that I have right now, I have a buy on Bajaj Finserv. A disclaimer that I have some positions over there, so there is vested interest. But that's a buy with a stop at 1644 for targets of 1720. And also a buy on Marico, which after a long time is coming into buy zones. Here I would recommend buying with a stop at about levels of 526 and a target of 555 on the upside.
30 seconds, and New India Assurance, just on charts, anything, Mitesh? 8% again today.
I think it's been running, it's been having a vertical rally, I think, since mid of November, which is about levels of 140. And there were a lot of buy signals over there. And I think while the long-term targets still suggest that we have about 290 on the radar, I think an entry point here, Prashant, would not be very comfortable. I think, it's run up from 140 to 250 in a matter of less than 2 weeks. So I think maybe on a pullback, if you see some consolidation happening, a pullback to 10-day average, maybe then you would want to buy this one. But yeah, I mean, if someone is having it, just hold on. 290 is where I think the stock will take a break.
Okay. All right, Mitesh, thanks very much. We'll come back to you. Now, PVR has launched a premium flagship offering at Mumbai's luxury mall, the Geo World Plaza. This marks the first major premium offering from PVR after the Inox merger. In fact, the property is described as the link between the two. CNBC-TV18's Rashna spoke with Ajay Bijli, a promoter of the company, about the Mason Inox upcoming releases and the much-debated passport scheme which PVR introduced. Listen in.
We've already got Maison PVR, which is like the house of PVR, where all the brands, different experiences, living room, library hall, loft, the drive-in have all come under one roof. And it's in a very good mall, Geo Mall. This is also like 2 kilometers away, great affluent, catchment. The mall's positioning is very luxurious, very premium. So we thought, why don't we have 2 iconic brands. We have Inox, we have PVR. We said, why don't we also call this House of Inox and Maison Inox as well? And this also has a lot of offerings under one roof, a lot of experiences. We've got the Gatsby bar here, where, after the famous movie, The Great Gatsby. And that itself creates a very good brand universe. People can have a drink here. You can eat before or after the movie. The same menu which is here can also be serviced in Insignia. We have 2 luxury screens of Insignia here. That's one experience. And then we've got, obviously, the famous IMAX, which is a big screen format, makes any movie bigger and more impactful. And then we've got very high quality 3 premium screens as well in another area that we have called Galleria. So with Gatsby's, Insignia, Galleria and IMAX, everything is like a premium facility, and just calling it the flagship property of Inox brand.
Of late, PVR has become synonymous to not only bringing premium experiences but ultra luxury experiences. Like you mentioned, Maison is just 2 kilometers from here. Another one is the drive-in theatre, which was again a first of its kind in Mumbai recently. And now this. Are we actually targeting just premium segments? Are you looking out to expand, especially with Inox merger coming in and Satyam merger? What is your focus area right now?
To be honest with you, Maison PVR opened maybe 2 years ago.
Yeah.
And this is opening after 2 years. So in the middle, we may have opened about 100 odd screens, and all screens are at the average ticket price of 260 rupees. Only 14%, in fact 13.8% of our portfolio is premium to luxury. Bulk of our screens, which is about 1720 odd screens, they are still screens which are with an average ticket price of 250 to 260 rupees. So there is no focus at all of only going towards luxury. Because India is a very disparate market, you have a consumer at every price point, and people's tastes and preferences are very, very varied. We want to give a solution for every taste and preference. So people who like to see, on recliners, they want very good food, very good service. We have hospitality staff. There we have director's cut, Maison Inox, Maison PVR, Insignia. Other consumers who are sensitive about how much they want to pay, we have the normal mainstream cinemas.
So, talking about average ticket price, we'd of course want to know what is the ATP for this particular property. Yeah. But if we look at the focus of these geographies, like you mentioned, these 3 premium segments come in Bandra, in Mumbai. Where are the other 250, 300 ATP priced locations? Tier 2, Tier 3 cities, is that a focus?
No, even every big city has various diversity of consumers, you know that. Yeah. So I mean, we have so many screens in about 115 odd cities. You can say, even in Bombay we've got Borivali, Kandivali, Malad, Mulund. The average ticket price is not so high at all, and 115 cities, so about I think 50% is tier 1, and then you go tier 2, tier 3. So Ujjain, Nanded, Bhubaneswar, Dehradun, so many cities. So there the average ticket, Mohali we're opening as well, that's about 150 to 200 rupees.
Okay. Talking about encouraging cinegoers, last quarter we saw a massive rush with people flocking back to cinemas, with Barbenheimen as a phenomenon, Gadar, and all of that sort of reflected on your balance sheet. It was a great quarter. Yeah. What is the expectation from here on for the next quarter and for the rest of the half of the year?
Well, you see, we are a very volume-driven market. 1,400 films come through the system, and sometimes a big movie may not perform. So that's okay, because then a small movie may end up doing very well. So my expectation is that this is going to keep on happening. People have to look at the overall, overall performance of the company rather than movie by movie. Because as I said, sometimes smaller movies compensate for a big movie, and sometimes the big movies just hit the roof, like another level altogether. They go completely out of the park. Who would have expected 500 crore, 3 movies of over 500 crores, Pathaan, Jawan and Gadar 2. Even pre-COVID, something like this never happened. So my expectation continues to remain the same. I think we will, like this month itself, we're opening with Animal and Sam Bahadur tomorrow. We've got Donkey coming, we've got Salar coming, we've got Aquaman coming, we've got, that Wonka coming. So many films are coming. So I'm expecting, the footfall to be probably equivalent to the month of August, which was the best month we've ever seen.
Another thing that was launched this year that sort of motivated all the cinegoers to take a PVR again was the PVR passport. Yeah. Would you like to explain how's the response been like? And also there's a lot of confusion with viewers. If you could explain how a user can use a passport to the best of its capability.
Well, you see, the Monday to Thursday was an issue for us because people obviously have more discretionary time during the weekend. Yeah. So we felt that Monday to Thursday we need to come out with a solution which basically takes care of our occupancy levels. So the passport was focused on that. It was also focused on people who have time during the week, but they are a little sensitive to how much they want to pay, and it worked out well. Of course, that was our first version. You see, I always believe in trying things. Some things work. Even if you get your iOS update, the versions will keep changing. So if a company like Apple can keep changing its software, we are just an exhibition company. It was a first experiment. It did exceedingly well, but we're coming out with more. We've taken feedback from customers of what more things should be included. For example, it was not southern India did not have the passport. Now we're introducing there as well. It was $699. Now we come up with another version, which I will not just now reveal because it still has to be launched.
This is the opportunity for an exclusive.
Because the teams are working on it.
Okay.
And so we got that feedback, very good feedback. And based on that, we're coming out with a version 2 very shortly.
Okay, interesting conversation out there on PVR. As we speak, actually, the stock has moved to the high point of the day. Keep in mind, you have the big release this weekend, Animals releasing. So Street is well quite optimistic on the prospects out there. For the time being, we'll slip into a short break, I think. We'll be joined by Deven Choksi as well as Dinsho Irani to discuss more on the markets, and we'll focus on a couple of stocks as well. Welcome back. Well, the markets have seen a big recovery actually from the day's low. It's a buy on dips market, and that's a testament on the screen. Just look at it. Wipro is at the high point of the day. NTPC has done well. And HDFC Life moving back towards that 700 rupee odd mark. So big spike is what we're seeing on that stock as well. Devin Choksi of DR Choksi FinSurf is with us. Hi, Devin. Good afternoon. Thanks so much for joining in. Well, we've had some of these big IPOs, that are listed today. Tata Technologies first up. Big gains out there. But have the valuations put it out of reach now, or will you still be a buyer on some dips?
Yeah, good afternoon, Nigel. Well, I think on one side, when you look at the peers, that is Tata Elxsi, KPIT, I think LTTS, but it is slightly inexpensive. But I think when you compare the Tata Elxsi and the KPIT along with, probably you find that Tata Technology has joined the bandwagon of putting in the range of 65 to 85 times price earning ratio. Currently, as it stands today, on the current market price, the stock is, I think, somewhere around 70, 75 times price earning ratio on future earning basis. So, frankly, I think the stock has become expensive for sure than what it was offered at IPO level, where there was, I think, headroom available, margin of safety also was available. But that's a normal trend. Any company which is there in the engineering R&D space, and over there you are having a larger amount of visibility of business, largely because of the fact that the transportation industry, the automobile in particular, is positioning itself, I think, from conventional ICE to the EV market. And that's where the demand is coming up for the larger players from OEM side, which are the clients of Tata Technology, where they're basically asking for end-to-end solution, starting from designing of the vehicle to going up to, I think, putting the entire charging mechanism also at the same time. So all in all put together, I think this kind of businesses are only going to increase in next 5-7 years. And that's where probably I think market is more excited about. Maybe I think corrective downside in the stock price is always welcome move to buy into the portfolio. But at this point of time, I think the stock is trading in the same range in which I think Tata Elxsi and other 2-3 players are putting it.
Okay, that's the word on Tata Tech. Devin, hi, good afternoon. Let me sort of ask you about the other major listing of the day. I don't know if you've had a chance to look at it, but Gandhar Oil has generated quite a good response. We've spoken to the management as well. They're in specialty oils. White oil is one of their big products. Did you happen to look at this company?
Yeah, briefly, Survi. Did look at this company, I think, at the time of IPO and probably studied the business. Looks pretty impressive, I guess, I think, and operating in a niche area where the customers are also growing and growing steadily, of course. I think FMCG business itself, I think, is growing at around 15% or so. And within that, personal care business is growing around the same rate of growth. So certainly, I think this company has the advantage of dealing with some of the larger customers and at the same time in the niche play. Given the fact that I think consumption-related theme is going to persist and going to continue, the companies like Gandhar Oil, which are into the crude oil derivatives, I think should reasonably perform well. As long as the crude oil prices are not moving heavily on the upside, probably I think you are going to see the margin also remaining quite healthy as far as this company is concerned. So we like the underlying potential in this particular company. Of course, I think haven't applied mind on the valuation and the way forward for that. But I think in general, the business looks reasonably good from the investment perspective.
By the way, I just want to point out that quite a few PSU stocks are continuing to see good buying traction. That's been the trend this week. And right now, they're all bouncing to the highs of the day. Let's put up the intraday on NBCC, for instance. Stocks up almost 8% as we speak. The gains this week, and it's a shortened week, gains are about 18% this week. BHL is the other one that's had a phenomenal ride, continues to find more traction. Quite a few of these PSUs, NMDC, Steel, BEL, Bharat Electronics, then the larger lot include Coal India, etc. Most of them are...
the insurers, Surabhi.
And of course, the insurers, absolutely. New India, we're just discussing that stock as well. So the PSU rally is well and truly intact. Devin, your thoughts? I mean, it's really been the year of PSUs, and who would have thought? But I guess one has to tread with caution now. I'm not talking about the PSUs on the Nifty. Let's leave them aside. But is there anything else that you like in the PSU basket where you're still comfortable making a fresh purchase?
Well, I think most of the PSU companies would have great business to talk about, undoubtedly. Major challenge is in the execution. Even consider the fact that BHL is receiving successfully, I think, larger amount of orders, including the 3,000 crore order that they have received from Ministry of Defense on the naval side. I would think that I think this gives a good amount of visibility to investors on one side, of course. But when you look back last 12 months, out of the 4 quarters, I think in the 3 quarters, the company reported losses. And the turnover has remained, I think, largely in the stagnated areas. So I think one is not fully convinced about how exactly this business should be read. Because on one side, you have got the increased allocation of orders to you because of government spending on infrastructure, government spending on railways, government spending on defense. And as a result of which, I think the companies like BHEL keeps on getting higher amount of orders. On the other side, the execution part is something which I think, at least I do not fully understand. So one may well argue that I think at some point of time, these companies would start producing profits. And if they do, then such situation, I think the price is justified. Yes, do agree. But I think, mind well, this is 60,000 crore market cap company. And for 3 out of 4 quarters, I think you are not seeing the profits. So I think one will have to be trading very carefully, I think, in given situation, because the other alternatives are available in the market, which may probably give you larger conviction as well.
Okay, all right. Thanks for joining us, Deven. Great speaking with you. Appreciate you taking out the time and joining us today. Thanks indeed. Dinshaw Irani is now joining us. He's CEO at Helios Mutual Fund. Dinshaw, great to have you with us here. Good morning. Thanks very much for your time. Prashant this side. I want to start by asking you, how's life? Sorry, I said, oh, that's good. Well, thanks for that. How's life changed then, Shaw? I wanted to start by asking you that with the mutual fund and the new role. How's the day-to-day changed?
Well, I keep much more quiet nowadays. I don't talk too much. I'm much more aware about my surroundings and environment and stuff like that. So I'm much more sticking to the compliance rules. So that's all that change has happened. Otherwise, on the investment side, we still remain the same. So there's no change there.
And obviously, you're listening more, right? You're listening more closely. Good morning, good afternoon. Yes, I think. Before elections, we used to do for years, a straw poll about outcomes. We get at least not the actual results, but exit polls later this evening. Do you want to take a shot at it broadly? What's the what do you think is the most likely outcome?
I wouldn't take any shot at it, but I think the best scenario for the market would be that things remain status quo. And if at all the ruling party loses any of the states, it should be with a big margin. Even if it's a marginal margin, I don't think the market will take away too much from that. So unless the results are very deviant from what the expectations are, I don't think the markets will be impacted to that extent anyways. But that's one of the I think things out of the way for the market, I suppose. I don't see the market anyway. We actually don't expect the market anyway to rally too much or to fall too much on the back of these results. That's what our feeling is.
Prashant, he just said that now it's far more about compliance. He's speaking less, being very aware. And then you're asking him to predict politics. No, really?
No, because that's clean outside the ambit of compliance and all these other issues, right? I mean,
I think that's why he'll be the most careful as any practitioner from the financial services world. So I'm with you. I understand that positioning, Dinshaw. Let's come back to the market. So you just said that you're not expecting a fall. You're not expecting a big tearing rally either. Then what's the best way to play it? I mean, mid-caps are still doing very, very well. So what's the best way to play it then if consolidation is what you foresee in the near future?
Yeah, so actually in a consolidating market, that's the best that a stock picker wants, because he then can really spend his time on his ideas and work through them and probably gather the position that he wants to. And that's what I think we are good at. And that's why we are taking our own sweet time. And in fact, even in a flat market, you get to see these stocks which move up during these flat markets. And that's what we try to identify and we work with. And frankly, I mean, our focus has really been on consumption plays and on finance. And obviously, in certain cases, we also looked at state companies, which we feel have offered quite a bit of value at these levels as such. So we're working our way through this, and I think that's the best way to play it out as such. Look at your valuations, be comfortable with them, and obviously your future has to be in, I mean, the future growth story has to be in play for you to work there. So.
Hi, Dinshaw. Good afternoon. Good to see you in. Dinshaw, I wanted to ask you about something that you just mentioned, consumption story. What do you like? You like the discretionary part, I think, is what you've been holding on in the past few interactions. So give us some clarity out there. And in terms of the government-owned companies, from which sector?
So, okay, Nigel, so basically discretionary is what we're playing with. And here again, we are very specific about our discretionary plays. In fact, we probably would be having stocks which are more of an aspirational luxury or, aspirational spends. Rather, that makes up a big part of our chunk of our portfolio. Mainly premiumization is what we try to play with in the consumption space. On the PSU front, obviously, we are looking at, apart from the largest bank that is on offer in the PSU space, we also have plays within defense, we have plays within utilities or energy space, where we think there's a lot of value happening. So these are the kind of spaces we are in today, in the PSU space.
Dinshaw, since you brought up PSUs, and we were discussing, this with our previous guest as well, this entire pack, because it's really been one huge outperforming sector this year, right? I'm going back to the question on politics. Now, if at all there is some sort of a disruption there, if there's an outlier event, state elections now and, general elections, or any confusion about, the continuity of the present regime, could that be a reason that may trigger profit-taking on these stocks? Is that something that investors should be wary of? Or do you think the intrinsic PSU story is so strong that the stocks will continue to move on their own merit, irrespective of what happens to elections?
So state level, the local elections, which are, the 5 states which are going to be out, some trend will be, I think, visible by the end of the day today after the exit polls come out. But I don't think that will be the one which will be a decider for these kind of things. The central election, obviously, whenever it's in May as such. But the fact is that if there's any adverse result that time around, obviously the story will be a bit postponed. I don't think it'll be over and done with. There'll be probably a pause in the story, and probably that whichever new government actually comes in, I think they've realized the way forward is this: you need to have growth, you need to have reforms, and that is only the way forward for you as such. In fact, we are on a very steady pace. In fact, today there was a report by one of the big broking houses. In fact, yesterday evening was the report by one of the big broking houses, which mentioned the same thing. That the way forward is this, and by 27, you're looking at being the third largest. So I don't think any government would want to, any new government which comes in, if at all, would want to take a pause on that story. So maybe I think that will continue. And obviously, markets are always have a knee-jerk reaction initially, and then probably semblance comes in at a later phase. So maybe you'll see some kind of a fall in PSUs at the time of that result, and then things will again work out the way you want it to.
By the way, you said you like between consumers, you like discretionary. What in that space, Dinshaw? Within discretionary?
Yeah, so basically, as I said, mainly the ones which are taking care of luxury spends like hotels and probably real estate, and obviously the apparels, the luxury apparels and stuff. Not luxury, but at least we're talking about formal apparels and stuff like that. So these are the kind of plays that we're playing out here, jewelry manufacturers and stuff like that. So that is what we like, Sean.
What about on the auto space, Dinshaw? I think the preference was for auto ancillaries in comparison to the autos. So how you'll position there? Ancillaries of the two-wheelers. The two-wheelers actually have come back in style. The number of units sold may not be as much as 2017, but premiumization is playing out yet again over here. How do you approach this space?
So, Nigel, the point is that in the auto space, we were very concerned, we still are concerned about the EV onslaught as such. And I think two-wheelers are somehow a lot impacted by that. And frankly, what you're seeing today is mainly, I think, coming off a very low base as such for two-wheelers. And fortunately, the marriage season has kicked in a big way, and you're seeing a lot of offtake in the two-wheeler space also. In the PV, again, we are very concerned about the EV playing out in the future. It still hasn't played out as such. We don't think any of the players, the domestic players, are geared enough to meet that onslaught as and when it happens, the EV and hybrid onslaught as such. So that's why we are staying away from that space. And the ancillary part, I don't think we are also keen there, because if your OEs are not going to make money, there's no way the ancillaries will be allowed to. So we are away from that space also to a very large extent as such. So that's where we are.
Dinshaw, I want to go back to the first statement that you made, where you said that you're not expecting the market to fall, but you're also not expecting it to sort of go up in a tearing hurry. Now, why is that? I mean, one could argue earnings have been pretty decent, stable. This whole US 10-year bond yield issue, the interest rate, big fears, perhaps they've subsided. We've discussed elections already. I mean, that's the only outlier event. But aside of that, why aren't you expecting a bigger rally now?
So, Sribi, the point is that even this quarter which went by, though the earnings growth are very exciting, but look at the top line growth. That didn't do much. In fact, if you take away a few industries, there was a degrowth in earnings overall for the index I'm talking about right now. So that's why we believe that there will be only pockets which will work. And frankly, I mean, you don't want only pockets to work for the whole market to fire. You need the whole everybody else to participate. So going forward, we don't see. I mean, in fact, if you talk to various players on the in the market, they talk about some kind of a slowdown happening in terms of consumption. There's a limited amount of potential. In fact, if you talk to FMCG guys, which highlighted that they're looking at a rural economy firing, they themselves are now telling you that no, it was a false green shoot, and we're not seeing that anymore as such. So you need every other component to fire. And frankly, I mean, in fact, when you talked about the US also, the yields have come off on the longer dated paper. But still, the difference between the 2 and 10 is still some 40 bips, which is not too exciting. In fact, if anything, the yield curve has normalized from 5-year onwards as such, which is at a much higher rate, which is a very concerning part for, I'm sure, the Fed in the US, and they want it at much lower level. So I think there's still a long way for them to work this out. I don't think they're out of the woods as such. So these are the kind of things that are playing out. On the India front, I don't think apart from the rural economy, there's much of a concern as such. But frankly, I mean, if you talk about the way US is or the way China is, that's like 1/3 of the global economy, which is not firing to that extent. So that's a concerning area. I think that's what's holding us back. And that's why we believe that at least the market needs a quarter or two of consolidation before a new move starts happening.
Okay. All right, Dinshaw, pleasure listening to you. Thank you so much for taking out the time and joining in. And we look forward to the next interaction. You have a good rest of the day.
Thank you.
We'll take a break. On that note, on the other side, as always, we'll get you on all the buzz on the dealing room side. And then, of course, a couple of trading calls coming up with Mitesh Thakur as well.
Welcome back. This market wants to end the November series with a bit of a onslaught. It seems wants to go at the high point of the day. The Nifty has moved up. Cipla, pull up the intraday chart out there. The street is sensing something. That stock has moved to the high point of the day. Nestle is another one that's moved higher as well. So that as well should come up for you on the screen. But the reason that the markets do well is because the heavyweights have to do well. And the Nifty Bank has cut its losses. It's only done around 60 points as we speak. And HDFC Bank, last few days it's been showing some kind of move, from the lows. It's showing that inclination to move towards 1600 odd. And even today, it's recovered a fair bit from the low point, currently moved into the green. Good time to get in. Nimesh, what are you picking up? What a fantastic series it's been for the bulls. The shots have got stumped out on the wrong side. But what are you picking up?
Hi Nigel, a day of consolidation, so to speak. But again, today the flows won't be important because of the MSCI rebalancing as well as the expiry as well. So directionally, you can't talk too much about from a flow perspective. But again, the sense I'm getting is that there is a bit of bias towards the broader market. So the outperformance in broader market continues. The index is up 0.5%, but there are a lot of big winners within the broader markets which are doing well in trade today. But the theme clearly seems to be the PSUs. This has been the series of PSUs, and all of the PSU stocks have done well. Even in today's trade, if you look at the top 5-6 F&O gainers, there are likes of GAIL, BHEL, BL, all within the PSU basket which are doing good in trade today. So 2 out of 3 big triggers are out of the way, which is the MSCI rebalance as well as the expiry. Now all eyes will be on the exit poll data which will come today evening. So maybe you'll see a bit of volatility in tomorrow's trade, but I guess from a series point of view, the November has been quite strong with big gains in the broader market, and the theme of PSU outperformance continues.
Okay.
All right. And Nimesh, that's the overall kind of lay of land. But in terms of individual stocks, what are you picking up?
Well, as I said, a lot of stocks are buzzing in trade today. The first stock on my list today is Timken India. There was a large block, nearly 2.5% equity got changed hands, a deal worth close to 600 crores. I understand a non-promoter entity was a seller in today's block, but at the same time, a leading domestic mutual fund was a buyer. So the disclosures would be quite interesting in Timken India. The second stock is Hutco. Part of that PSU theme which is doing good. Hutco is buzzing in trade today, large volumes. I understand some HNI interest seems to be back. And hence, after a bit of underperformance in the last few days, that stock has bounced back well in today's trade. The third stock is LIC Housing Finance. For second day running, this is one stock which is well bid. The volumes are on the higher side. The sense is a couple of large HNI investors are again active buyers now, and hence a bit of excitement in that stock in the last couple of days. And the last one is Cochin Shipyard. Again, big move in that stock in today's trade on large volumes. I guess the street is now anticipating a large order win for company very soon, and hence that stock got excited in today's trade.
Got it. All right, Nimesh, thanks a lot for that. Well, just pull up one more stock. We have Relicare that should come up for you on the screen. We've been making this point at around 215 to 220. For someone who believes that this open offer is going to go through, well, they'll be looking to play that short-term arbitrage. That's buy it at 215, 220, and you have an open offer. If it gets the green signal, then you can tender in at around 235 odd. And in the last few minutes, even from today's low, the stock is up close to around 4%. So Relicare should come up for you on the screen. Some part of the street believes that it's going to go through, and that's why, in fact, that one has recovered a goodish bit. To give you a background, the Burmans, they are looking to take a larger chunk, and they've launched an open offer at around 235 rupees a share. So that arbitrage opportunity is still open. Mitesh Thakkar is back with us. Mitesh, last 20 minutes, good times in November. Hopefully Santa comes to town in December. But what are the picks you have for us?
So Nigel, a couple of things, I think a lot of people are focusing on the fact that today is the F&O expiry, but today is also the monthly closing, and we are having a highest closing for the month. We're closing at the month side practically. I think that, and these indicator setup suggests that continuation. So I think December should be a good month, at least the first half of it. And we should see the markets drift higher. So trade with long bias. You might have hiccups in between, you'll have supply pivots where profit booking will happen, but the overall setup is positive. Right now, I have a BTST on Ambuja Cement with a stop at 434 for targets of around 450, and a BTST on Ashok Leyland with a stop at 181.5 for targets of 186.
Okay, all right, Mitesh, thank you very much for that. Appreciate you being with us and giving us all of those trading calls. Well, the month is over and it's time for December come tomorrow. So auto sales, of course, will be coming out for the month gone by as well. Sonia is here with the key expectations. Sonia.
Well, thanks a lot. Auto sales for the month of November are expected to be a mixed bag this time around. The passenger vehicle segment is expected to grow in low single digits, while the two-wheeler segment has come back in a big way. If you look at the overall growth for the industry, the two-wheeler segment is expected to see wholesales are expected to grow 25% year on year, while medium and heavy commercial vehicles are expected to rise about 12% year on year. The passenger vehicle segment, though, has undergone a slowdown because of a slower growth in the small car segment, and hence we are expecting overall just a 5% growth in the passenger vehicle space. For tractors, expect the wholesales to grow 13% year on year. If you look at stock-wise expectations, as I said, for passenger vehicle makers like Maruti, the growth will be in low single digits. So Nomura is expecting a 5% growth. Bajaj Auto will see a good recovery, 24% growth year on year. And we have seen the Bajaj Auto stock hit fresh highs as well. Ashok Leyland growth will also be very strong in high double digits. 15% growth is what we're looking at. While Hero MotoCorp has come back because of a good pickup in the rural market in the two-wheeler space. So 27% growth is what we're looking at from Hero MotoCorp. Let's end with TVS Motor, which is expected to see a 34% growth. So all in all, a mixed bag expected this month for the auto sector.
Thanks a lot for that, Sonia. So we'll keep an eye out on those numbers, auto sales numbers. That's another trigger that the street looks forward to. Moving on then, India's second quarter GDP, that's for the last few quarters, so the months that's July, August as well as September, will be announced at around 5:30 p.m. today. Now, a CNBC-TV18 poll sees the number coming in at around 7.03%. Lata joins us to run us through the key expectations. Lata?
Well, the overall second quarter GDP expected to come around 7% as per our poll. Just to give you the trajectory, it was 7.8% in Q1. And year ago, the 7% comes over a 6.2% year ago. But let's just concentrate on the 7%. It's a damn good number if it comes that way, because the Reserve Bank's forecast, and that's a fairly accurate forecast normally, for July, August, September quarter is 6.5. So this is like a huge outperformance if it indeed comes at 7. As well, the US GDP growth number for same July, August, September, which was announced overnight, expected to come at 5%, has come in at 5.2%. So usually when a large economy grows higher than expected, you can see ripple effects. So there's a very good chance that we are going to outperform the Reserve Bank's 6.5% forecast. Agriculture will not be the one that will give a helping hand. As we know, there have been troubles with unseasonal and late and delayed monsoons, badly distributed. So that's coming in at only 2.7% according to our poll, compares with 3.5% year ago. But everything else is strong. Industry expected to be strong because even if you looked at the IIP numbers, which come earlier, for July, August, September, the average is 7.4%. So industry should do well. Services, trade, hotels, finance, all these sectors, the incremental data we get from either PMI or PMI services or from other sources are indicating a strong showing. And the nominal GDP, which is real GDP plus inflation, may not be very high. It may be closer to 8% because the deflator used is WPI, and WPI has wholesale price index has been running negative. So we may not see a very big difference between nominal and real GDP. The importance of this number is it's the last big number before the monetary policy is announced on December 8th by the Reserve Bank. So if it's a very strong number, the Reserve Bank will take cognizance of this and may continue with the tightening of liquidity that it has been at. But a strong growth number will also mean that foreign investors who are already fairly bullish on India, have been net buyers over the past week, could perhaps buy more ferociously.
Okay, well, that's a big cue, isn't it, Lata? Thanks very much for that. We'll take a quick commercial break here. Hemang Jani will be with us on the other side. There's 12 minutes to go for market close. Stay with us. Okay, welcome back. 50 points now. So this is turning out to be a very good session. Actually, not exactly similar to yesterday, but yesterday also, I mean, the last 60 minutes accounted for a large part of the gains. Today as well, I mean, in that sense, it's similar. Real push higher coming through here, 20,145. But I think there's some, of course, that flow factor as well, as Nimesh was pointing out earlier, which perhaps is at play. Hemang Jani is with us with his thoughts on what we are seeing out here, which is very strong gains, continuing gains. Hemang, the small cap index is continuing to rally on despite warnings and a lot of hand wringing where valuations are and how much it is done, etc. Another 1.5% today. Any thoughts on that space and your top ideas from the smaller sort of companies list, from the mid and small cap space?
So good afternoon, Prashant. I think, yes, the way the mid cap and the small cap companies have moved over the last 6-7 months is surely, some sort of a surprise for a lot of people. Of course, there has been certain improvement in the performance, but it's also more to do with the fact that a lot of money is chasing this sector, and the overall sentiment continues to be good. So I think if I have to play, this particular theme of small cap, etc., then I would go with the sectors where you continue to see, incrementally positive data points. So be it, the infra construction space, so and particularly some of the PSU names. So something like a NBCC, BAIL, Power Grid. I think this is the space where there is a certain degree of momentum in the order inflow, and the earnings visibility is still good. So I would surely go with that particular theme.
I've never understood why people, I mean, actually many do, like NBCC. I mean, I don't know. I mean, there may be good reasons for it, but it's a project manager with very small...
Construction company.
No, they actually oversee projects. So they will get contractors on orders that they receive, and then they will give out the order, and they end up making about 4-5%. I mean,
yes.
It's a very small margin business, but and they of course work on government orders because, I mean, they're a government contractor.
So they're looking to monetize some part of that land, which has been really slow. And then the other part of the money that they get is from, monitoring these projects as well. But in the past, it's flattered.
Huge land. I mean, and Prashant and I can probably vouch for it. I mean, every time you cross the All India Institute of Medical Sciences in Delhi, it's always been one huge parcel of land. That's just one of the many, obviously, that they're developing. So I guess.
Indeed. But I wanted to get Hemang's view. Hemang, I wanted your view on a couple of stocks which have been underperformers, actually. India Cements, we've heard it many times that maybe there's a possible M&A in the works. That one's doing well today. And the other one is Delta Corp. It seems the street believes there is some kind of relief that's coming for Delta Corp. Both those two stocks are moving well. What's your view?
We do keep hearing about possible M&A and, a majority stake, maybe sold at a premium, etc. But, the timing of that event is never known. But the only thing I like about India Cement is, the southern, cement companies are doing well in terms of performance, and the price hike is relatively better there. And secondly, if you look at the valuation at $84 per ton, it is 1/3 of the some of the large cap companies. So I think there is certain degree of comfort, and when the stock is available around 200-220 zone, you see a bump up of 10-15%. So I think that is an interesting one from a trading perspective.
Okay, Delta Corp.
Delta Corp, neither we all know the regulatory issue which is there. However, since you have very few companies available and the stock is beaten down, people or investors with a slightly higher risk appetite tend to look at it that, okay, once you pay a certain amount and go for an appeal, at some point you may get favorable judgment. So I think it's more of a risk trade, as I would call it.
I think now playing the stock has become equivalent to perhaps playing in the casinos, right? Because you don't know which way this litigation is going, what is happening with those GST demands, and those are massive numbers that the government is seeking in the form of tax, and some are arguing a lot of it is retrospective. So therefore, it's all in courts. and we'll have to wait and watch what happens. Hemang, just very quickly before we start wrapping up, today's listings, phenomenal moves. But my question is now, with Tata Tech already having done what it has, the question is, should you be looking to buy, or are there better bets in the market in the form of a KPIT or maybe even a Tata Elxsi for that matter?
I think, this entire theme is actually doing pretty well. Momentum is so strong that you just want to participate in some of these names. So I am personally not very comfortable, buying this kind of a momentum. But both IRDA and Tata Technology, I think there is enough appetite, and if the large number of floating stock is already absorbed, day one, like in case of IRDA, almost the same amount of equity got traded on the day one, right? So you would see that momentum continue for a few more days. So makes sense to buy in 2 or 3 parts.
Okay. All right, Hemang, we'll leave it on that note for today. Thank you very much for joining in, almost running into market close. So let's take stock of the day gone by. November draws to a close with the Nifty managing actually a 38 point gain for itself. And that's thanks to the fact that banks decided to cut the losses. Earlier in the afternoon, when we had a bit of a wobble on the bank Nifty, but that picture is looking more stable. Just 55 down on the Nifty bank. That explains the move on the index as well. Anyway, since we've got gains, let's talk about the winners. Ultratech Cement is the leader on the Nifty today with a gain of almost 3%. HDFC Life comes in second position, 2.5% up. Auto stocks, we've been discussing this, of course, for a while now. Eicher Motors, M&M, Hero Moto, good gains between 2% to 3% on many of them. And the gainers also include a Bharti Airtel. That was up and about. On the banks, that's where the story started changing. You still have red, but not as much red anymore. That's pretty much how it played out. HDFC Bank is ending completely flat. ICICI Bank is now down just about 0.5%. And we're seeing some traction on an SBI as well. Still negative, no doubt about that, but not as bad as earlier. But otherwise, today it was TCS and Reliance. So I think the big boys basically said, we've done enough, we're taking a break today, and therefore some consolidation on the index.
Well, indeed, a few stocks actually that really spiked up towards the end of trade. Delta Corp, that one, in fact, the street senses that there is some relief that's come about. We have no confirmation on that. But for the time being, that one goes home with solid gains up close to around 8%. A few more notable movers in trade today. Navkar Corp. Last few days, I think Nimesh has been alerting us the street is expecting some corporate development. So that stock went home with big gains. Supreme Industries was up close to around, I think, 8% by the time it wound up. Genesis International, we had the management telling us that there's a big opportunity out there. We'll have to see how much of it plays out. So that one as well was up close to around 10%. Voltam Transformers, one of the big outperformers in the last few years. Well, that one as well popped up in trade. And SAT Industries, we normally don't talk about the stock, but it's come up as one of the top volume buzzers today. It had one of their subsidiaries listing a few days ago. And in fact, that stock as well goes on with something.
With Delta Corp, they're entering the real estate sector. I mean, the announcement came through that they are actually putting money into Peninsula land, about 100 crores. And,
but that's in personal capacity, I think. So that's Mr. Jaidev Modi's personal capacity.
I'm not sure. I think because the release came from Delta, and Delta and Peninsula Land are sort of forming a joint venture as well. Where they're putting in 250 crores as capital. Maybe the investment into Peninsula Land is in personal capacity.
Yes.
But the joint venture is, the release says Delta is now entering real estate. So,
that may be one of the
This could be perhaps a trigger for that very sharp move higher on Delta Corp. So 9%, 9.5% on that one stock. Well, 40 odd points higher. There's not gains to scoff at, especially given the size of moves we've seen recently, and the market's just kind of pushing up. We will, of course, wrap up on this edition of Closing Bell. It's goodbye from all of us here. Thank you very much for watching. There is more coming out on Markets Forward in just a bit from now.